Good morning, guys. We have already announced this series of sessions on investment banking, different corporate actions, fund accounting aspect, accounting, finance, technology, and many more. But we want to continue with series, all right, and add more and more values in your life so that you can understand each and every aspect of different, as I said, products and all, and that's how you can add more values in your day-to-day jobs, and that values it will really you know help you to grow in this corporate. But in return of that, what I want, I'll tell you what I want, like one comment, and share this content with others. Why? Because to read the books throughout the nights and to generate the content for 10 to 15 minutes for you, it's not a easy job, right? So that's how you can appreciate us if you like. So let's discuss then. So this session is on dividend, how dividend that we process. But here we're going to discuss the important aspect of dividend is like X state, how X state of dividend works, who announce that X state, how we perform the accounting entries on dividend X state, the different types of dividends, and many other important aspect of dividend which you would see, because those are important for your interview preparation as well. So let's start with the session without taking much of time. So when dividend in a company declared, so it should paid within a 45 days. So that's the generic or ideal period, I would say, and that's what we'll call it as a dividend market deadline as well. So the market deadline is 45 days from the date of declaration. When the company declare that dividend, so that payout, it should be paid within a 45 days of the declaration date, right? And if you don't pay it, this, so now see the now if company, let's say, doesn't pay that, or if they are not able to perform or process it the payment within a 45 days or 42 days, so we have a regulatory bodies as well, so where they knock the door of company and question to them why you're not paying it. So it's a liability and they should pay it. So dividend is the liability of a company and they should pay it to the investors. It's simple, right? And the X date or X dividend date is the trading date on and after which the dividend is not owned to a new buyer of the stock. So it means this statement is very important, right? The statement is very important, and the X date is one business day before the date of record date. So for Indian market now, the X date is one business day before the record date, but across globe you would see X date plus 2 days would be your record date, because the trading cycle we have, which is T plus 2, and that's what the X date plus 2 would be your record date, right? And the record date determines all shareholders of records who are entitled to the dividend payment, and usually occurs 2 days after the X date. So it means here if you see X date plus 2, X date plus 2 days would be your record date, right? If the today's, let's say, X date, then on Monday it would be record date. And if you want to get the benefit of any securities, you should purchase the security. You should have purchased the security yesterday only. Then you can take the benefit of such a corporate actions. So that's how you can relate, right? And the payment date, as I said, is the day dividend payments are issued to shareholders, and usually about 1 month after the record date. So once the company record the shareholding patterns and everything, then company issue the dividend to the shareholders. Dividends impact is also important. How dividends impact? Because this question, so you might see in your interview as well, and that's what I would say. Pay attention here. Dividends can affect stock prices and valuations in several ways. Here are some examples. If company announces a dividend that is in line with or more than market estimates, then the share prices keeps rising as more and more investors want to own the stock within an intention to pocket a dividend. So what it means, if company announce a dividend that is in line with or more than market estimates, so it means, let's say, market estimates 50 rupees for shares, and if company announce 70, So it means everyone want that benefit. So you would see appreciation in stock prices. And here you may definitely expect question like, what if when company announce dividend, what would be the impact on net assets value? If you see the first condition applies, then of course there would be positive change in NAV, net assets value of a fund. Second statement is also important. After the ex-dividend date, the share price of a stock usually drops by the amount of the dividend. In our live sessions, means trainings and all, or classes, we have discussed all the statements several times, right? If company announced dividend, let's say of 50, then you would see, let's say the market price of the stock is 250. So suddenly you would see 50 rupees drop in market price, then the new market price should be 200 for that particular stocks. So that's how the stock markets react. How this works, I'll quickly brief it out. Let's assume and take the situation, so where I'll draw the chart. Let's say market, this is a market chart, right? This is a market chart. Price, let's say 200, 250, 150, 300 and 350. So this is the price bar. Let's say this one is for X date, record date and pay date. So we'll talk about only from X date perspective, and this is would be entitlement date, ED. ED means it's not enforcement of directors, it's an entitlement date. Okay. So let's say price starts from here, something like this, and on X date, if price reach to this level, then automatically, and let's say company dividend price is 50. If the dividend price is 50, and if a company announced that, then suddenly you would see steep drop in prices up to here, adjustment, right? And then you might see then price, it will work from there, maybe go down, maybe go up. So that depends. But on a state, so if you apply the second situation, so you would see where the price of the dividend has been reduced by the dividend amount. So that impact you would see in your stock prices as well. Simple, right? Then another condition is third, if a company raises its dividend higher than the market expects, it could be taken as a positive sign and boost the stock price, right? So here again, simple example is if the company announce higher dividend than the market expectations, because market also calculated, analysts like JP Morgan, Goldman Sachs, they calculate or estimate and provide data to us. And if company announce dividend more than that, so everyone want that higher amount of dividend, right? And that's what you would see. So you would see high volatility in that particular stock, and that will affect positively on your stock prices. And the last one is similarly, a dividend cut can be interpreted as a sign of trouble and could result in a depressed valuation. So it means if company, let's say XYZ company is not offering any dividend, then if company is not offering any dividend, so it means people, they'll not look for that particular stock. And if that is the case, then people like us, they'll not invest in such stocks. And in that case, you can say again, if this is the case, so it means that becomes your depressed stocks and nobody want to invest in it. So those four aspects, so you would see those are very important from an interview perspective. If you are preparing for an interview, so I would say note it down and then prepare accordingly, right? So few terminologies that you might say, and those are very again essential. So difference between, again, as I said, dividend, it means dividend, it's a portion of profit. If company and profit, company will declare that profit, so or distribute that profit across all shareholders who are holding the company securities. But when company announce that dividend, so there are ways. One way that you can say, which is an interim dividend, and another way that you can say it's a final dividend. So when we say interim dividend is the one that is declared and paid in the middle of an accounting year. So it means, let's say accounting cycle, we have Jan to December. If company announce dividend in the month of June, right? Then that becomes your interim dividend before the finalization of accounts for that particular year. So it means we prepare financial statements after the December, right? So let's assume it after the December, we have a Jan to December cycle, and company announced dividend in the month of June. So that becomes your interim dividend. And if in an interview also, if you see such a question, so you can refer this example and put it in the discussion. And what about final dividend? Final dividend, it means it implies the dividend declared by the board of directors at the company's annual general meeting and up to that close of the final financial year. So it means here, if you see, company first of all finalize the financial statements, right? Company finalize the financial statements and then after announce the dividend in the annual general meeting. So that dividend you can call it as a final dividend, and basically this will done at the end of the year. Still, if you are not able to understand it, again I'll simplify. If company announce dividend after the financial year, after preparation of financial statements and all, so that dividends you can call it as a final dividend. And if company announce dividend mid of the year, before, let's say, preparing the final, final financial year statements and all, so that becomes interim dividend. Or if company announce dividend in the mid of the financial year, that dividend also you can call it as an interim dividend, right? Interim, it means in between. So when we say announced, who announced the interim dividend? Of course, company's board of director announce it. And final dividend, again, who announced it? After the recommendations by the board at the board meeting. And then only, members of the company, they can announce it in the meeting, annual general meeting. Then time of declaration before preparation of financial statement. And again, as I said, after preparation of financial statement. So means final dividend that we can announce after the preparation of financial statements. Revocation. It can be revoked with the consent of the all shareholders. So this interim dividend, it can be revoked. That depends on the companies, financial health and all. If the company's financial health is not good, and if in that case, let's say board announced that this particular, dividend, interim dividend, so this can be revoked. But final dividend, so anyways, we are going to discuss or declare, going to discuss that matter in the annual general meeting, and then after we'll announce it. So it means it is irrevocable. So you cannot revoke that. Rate of dividend, of course, quarterly, or maybe, if you see the interim dividend, most of the companies, they announce every quarter, or maybe let's say after, biannually kind of things that you would say. It means this ratio would be less, and this ratio, final dividend, that would be higher side. So the main important provision here is article of association, which is a legal document, declared only when the article specially permits the declaration. So it means if that article of association permits to the companies to announce interim dividends, they can, otherwise they can't. And this article of association provision, this does not require any specific provision in the article. Simple. So I hope now you got the resolution of difference between interim dividend and final dividend, right? So if I take you ahead and to see the other terms as well, how that works in terms of dividend. So let's see. So dividend again. So here you would say, definitely you would say 2 to 3 payout ratios. Those are again important one. So the first is dividend is the said to be final dividend if it is a declared at the annual general meeting. So it means in terms of, if you see any question as such, so that you can, answer in this way. General meeting means, and final dividend we discuss in meetings and then we discuss it out. But sometime you may expect questions. Question it like, can you please provide any example which you know? So dividend can be paid at the scheduled frequency such as monthly, quarterly, or annually. For example, Walmart, Unilever, and then Walmart and Unilever. So those examples which you can put in the discussion where they offer a discount on a regular basis. Sorry, dividend on a regular basis. So that becomes your interim dividend. Interim dividend. So this is the case of interim dividend, right? And this is the case of, here you can see declared becomes a debt enforceable against the company. So it means that becomes your final dividend. So that will announce at the end of the year. So a dividend payout formula, which is a very simple, total dividends divided by net income. Let's say total dividends, if company want to let's say if company is dividend is total dividend is 100 and company's net income is, let's say, 10,000. So if you calculate in this way, so see this, how much amount that company want to percentage, calculate the percentage. So that becomes your dividend payout ratio. How much ratio or how much amount that company want to pay out. Another payout ratio that you would see, payout ratio, total dividends net income, that is same again. So dividend per shares, how you can calculate dividend per share, earning per shares, how you can calculate it. So total profit, let's say company's total profit is 1,000 and company's number of shareholders are this, then calculate it. So 10, so it means 0.110 for per shares. So that payout ratio would be somewhere, right? So in that way you can calculate. So it means if you want to calculate in ratio, then you can put it into the just multiply with hundreds and you will have a 10%, 20% ratio as well. So earning per shares, it means for per shares dividend per shares, earning per shares it can be different and dividend per shares it can be different. If you want to calculate the payout ratio again as per this, so you can say dividend per share is 10 and earning per shares is, it means total profit which is, let's say, 100. So calculate this one, so that becomes around 10% for per shares, right? So company announced 10% dividend on the basis of net earning. So in that way, you may expect questions. So please prepare for that. Then next one is dividend ex-date. As I said, this video is dedicatedly for ex-date. So we'll see that ex-date. So ex-date, first of all, let me brief about what is ex-date. Ex-date, it means any date. Who announce ex-date? Stock exchange announce ex-date. Stock exchange announce it. Ex-date, it means dividend expiry date. Dividend expiry date. Any date stock exchange announce it and dividend expiry date. So it means if anyone purchase securities on ex-date, so that person will not receive dividend at all. So if you want the benefit of dividend, then you should purchase the securities before the ex-date. So that's the rule. So it means if you want the benefit of, let's say, dividend, if you're looking for a dividend benefit, then you should purchase shares before ex-date. You should purchase shares before ex-date, then only you will receive dividend. And this rule applies globally, right? So you might see exceptions with a few events or with the different companies or their stocks. That is depends on the company requirement and regulator. But again, as I said, when we say universal rule, it means most of the companies they follow the same. Stock exchange announce ex-date. Stock exchange communicate with the all the the participants who have participated in trading ecosystem. And apart from that, as I said, ex-date would be the dividend expiry date. So it means if you purchase any securities on ex-date, you won't be eligible for ex-date. And meaning, so again here from an interview perspective, we have updated few lines, so you can take a you can pause this video and note it down each and everything. The stock exchange set the ex-dividend date to get the dividend of a particular company, and the stock should be bought by the investor by the date. So it means before the ex-date, that you can say. If you want the benefit, then you can purchase securities before the ex-date. Announced by whom? Stock exchange announced 2 days prior to the record date. So it means, as I said, ex-date plus 2 would be record date. So it means record date minus 2 would be your ex-date, and ex-date minus 1, there would be one more date which is a entitlement date. So on entitlement date, securities should be traded or purchased. Correct. Then importance is more important, as the stock has to be bought on before this side or this date. So it means before the ex-date, security should be traded. Simple. Eligibility parameters: shares bought post ex-date dividend date which are not eligible or allowed for a dividend distribution. So it means Again, here you may expect question like, what if as a buyer, if I buy securities on X date, then will I get the benefit of dividend? No. On X date, if you purchase the dividend, sorry, on X date, if you purchase the securities, then seller will receive dividend on X date. On extent. So make sure this, even if you're from looking from investment perspective, you should purchase securities before the exit, not the on or after the exit, right? So now I hope you got the idea how exit works, right? All right, so I'll take you ahead quickly. So we have an example, so which you'll see. So the example says that this is basically a question so that you can try it. Let's say GMT mutual fund or fund manager purchase 1000 shares of XYZ company on August 2023 at a price of 100 rupees of each. XYZ company announced a dividend of 5 rupees. Again, ratio is important per shares with an X date of August 3. So X date was 3, right? And then that particular fund manager, GMT fund manager, purchased funds on 4th of August. The quantity is 1000. GMT mutual fund manager also holds 500 shares of the same XYZ company acquired before July 15, 2023. So it means that fund manager is holding GMT shares, right, with the different dates. One, if you see 500 shares uh, with previous date like 15th of July, means that 500 already that manager is holding, and the again another one purchase that he made after the X date. If you see, X date is 3rd of August and purchased on 4th of August, so it means this particular security which is not eligible for stock benefit, that dividend benefit, or even any corporate action benefit, I would say. Another trade, as he mentioned, for 500 quantities. So this particular trade is again eligible for a dividend. So we'll see that how much dividend that he'll receive with a different price. Price, it means this is a trade price, not a dividend price. On August 3rd, again, the GMT mutual fund purchased 350 shares. So see this again on X date also that person purchased securities of 350 shares at price of 95 shares. How many shares of dividend is GMT mutual fund mutual fund manager eligible to receive? So it means out of these three trades, if you see, one trade is for 350, another trade is for 500, and again 1000 shares with the third trade. So it means that manager placed three trades in XYZ company. So now it's difficult for us to calculate as the how much or how many shares are eligible to get the benefit of dividend, right? So you can take let's say 10 second and think about it, and quickly you can post your answer in comment section. Try it. So I'll get back to you in next 10 seconds. So think about it and then see how many shares are eligible for dividend processing, because the payout dividend payout ratio as well for 500 shares. So we that ratio as well, right? So see, for 5 rupees per shares dividend amount. So I'll brief it. So it means 5 rupees is the dividend ratio, dividend amount ratio. So you can post your answer in comment section. So let's start 10 seconds. Think about it, post your answer, else I'll take you through the answer as well then. All right. So I hope you got the answer. So we'll see what could be the possible answers or possibilities of dividends and all. I'll take you ahead and see. The answer is to determine, how many shares GMT mutual fund manager is eligible to receive dividends on. We need to consider the X date of August 3. So X date is August 2023, and the shares held on or before the X dates on or before the ex date. So sometime you would see change in rule, but as I said, if that rule say held on or before the ex date, so then you can consider that assumption. But ideally, it should be you should purchase the securities before the ex date. This is the rule, but sometime, as I said, you would see some rules, that would modify it with the different or certain corporate actions. So you can carry that or you can assume that also. So assumption is important or rules. If you have any, anything as such, if that modified way, so that is also important. If you have it, then you can now relate. So here, if you see the existing holdings, it was 500 shares held before the July 15, and the on ex-date purchase 350. So I believe there's two. As per this rule, so 350 and 500 securities, it should eligible for a dividends, and see, and held on or before that date. So total shares held on or before ex-date is 500 shares existing holding, right? And then this one, which is not eligible because purchase up to the ex-date. And if you see the another purchase that fund manager made, which is 350 shares, 350 shares made on 15th of, again, uh, August 4, right? Purchase on August 4, and 350 shares purchased on July 15. So it means total 850 shares. But I believe in this particular example, one more mistakes that I have seen where, so if you go back and see, so this guy, so my team made it. So I would say I'll correct that here only. So this portion, he made the statement like 350 shares. So if you see this one, so he made a statement for 350 shares at price 95 purchase on 3rd of August. So I believe here he's saying 350, and with the on a different piece here saying the different one. So purchased July 15. So it means, so this something will have to recorrect it. So if that he want to take this particular stock, let's say 350 also consider for a dividend eligibility, then rule should be held not on before the ex date. So it a rule should be securities held before ex date. Then, so here as per this rule, so if I say this rule again, let's say July 15 he made two trades, July 15 made two trades, so it means 350 holdings, this one, and 500 this one, so 850 that will tie with this. So it means 850 shares are eligible, right? Held on or before that, not on and not held, not on. So it should be held before that date, before the ex date, and before the ex date, then you can see now we have 850 shares. So it means 850 shares which are eligible, right? If that shares are eligible, so that you can calculate the dividend benefit. So I'll calculate the dividend benefit now. So we have a dividend benefit which is 5 for per shares. So 850 shares, 850 shares into 5, just calculate it and see the calculation. 850, 850 into 5, so that becomes 4250. So this is the dividend amount, so which will receive to you, and you can prepare accounting entries for the same amount. So scenarios which you see where dividend deduction, rate of fluctuations, and then dividend reinvestment plan. So it means once you receive, let's say you have calculated this amount, but what if company while paying, they have paid less amount? What if the rate has been changed, instead 5 company paid with a different rate? And what if you see company decided, or that investor decided to reinvest that 4050 rupees in XYZ plan, or let's say securities and all. So if you see all three scenarios, there would be many more as well, then you will, it's your responsibility to rectify it. But that challenges, as I said, we cover in our uh, training, live training that we cover it. So if you're looking for live training as such, how you can, find out the dividend discrepancies, how you can rate the Bloomberg, let's say stock exchange notification, different setup procedures of, dividends or different dividend events, let's say cash and stock options, DREAV, dividend reinvestment plan, processing of dividend reinvestment plan, and the, payments and all everything. If you want in details, you can join my live training program. But yes, here in this case, your dividend amount would be 4,250 rupees, which that you can process. So as I said, the one statement that team updated incorrectly. So before the exit, you should buy the securities, and you can sell it out on any means post exit. You can sell it out any point in time, but the rule which says where you should buy the securities before the exit, then only you can opt for a dividend benefit. That's the rule. All right. So now again, another important aspect that you would see, journal entry. So what could be the journal entry for that particular stock? So where, see, first of all, prepare the accounting entries for a stock investment as well, right? Stock investment account, debit to cash, whatever, shares that you have purchased, total with total amount, right? So let's assume it 1000 shares into 100. If you have this, then you can prepare accounting entry for the same. All right. So go through this summary and then prepare the accounting entry. You can try to prepare it, and if you have anything as such, then you can post your opinion in comment section. So on accounting entries also, we have a detailed, discussion in the group, or in the, I would say, WhatsApp group as well, that you can see people they posted. So you can join my WhatsApp group as well. So I'll give you link in description. And then for a dividend received, so if you see, for 850, shares, where the assuming the dividend is full dividend amount we have received 5 rupees for per shares, then accounting entry would be bank or cash account debit to dividend income account. So here one more twist that you would see, where we mentioned as a fund accounting team or fund accountants, where they post the accounting entries on X date. So on X date, dividend accounting entry would be different. So you can try to post that answer where, because this will be assignment for you guys. What would be the accounting entry on X date? Let's say as accountant, if I have received notification from the fund manager that you can post accounting entry for XYZ securities, then how can we record that dividend on X date? So with the same amount, you can take the example and try to post your accounting entry in the comment section. And again, if you're looking for a training or any courses as such, you can join my live training program. So where we cover end to end things, or in detail, I would say, like how we can set up the dividend in system, dividend processing flow, how we set up the instructions. If you see the dual currency in dividend, what could be the accounting entries? What if we receive lesser amount on dividend? What if the later on rate has been modified or changed? How we can rectify it? How we can update that? What would be the impact of dividend on net assets value of a fund? There are a number of things. How dividend we process at custodian level, from a reconciliation perspective, how we can modify or adjust the dividends. So you would see all that, different types of accounting entries or equations and calculations and all. If you're looking for that, then join my program. I'll ensure that, as I said, huge value addition. And if not, then this video is also sufficient. So if you have any question as such, check, the link which is I have given in description. You can book my one-on-one sessions, or else you can text me on WhatsApp 7380609230. This is my number. Text me on WhatsApp and get the information about different courses as such. So we'll see you in next session. If you like this content, please click on like button and share this content with others. Thank you.